The next question is equally interesting. It's from Mr. Vinit Joshi, and everybody has a stake in this. He asks, how long will this bull run last? When should we start taking chips off the table?
So first thing, according to me, there has been no bull run yet because you are calling it a bull run because you are starting on March 26th or whatever. If I look at it, as I said, on an annualized basis, the returns from our market in rupee terms over the last 5 years and 10 years and 15 years and 20 years and 25 years have been broadly in the range of sometimes 13, 14%. And in I think if you do it from 2000, whatever, 20 years, that is 2003 to now, it may be 17% per annum. So let us say it's 13, 14% per annum. Now, 7, 8 months are over, 7 months are over, and the index is up right now, year to date, 8.9%, more or less in line with its annualized returns over any longer term period. If you do it, also add last year to it. Last year, the index was up some 2-3%. So over 19 months, the market is up cumulatively 10%. If you say, now let's look at it in dollars, the return since December 2021 is zero. Because last year, the rupee depreciated by 10%. So this is not a bull run. If you want to see a bull run, please see what, like, our alliance NAV went up in 99, 280% for a mutual fund. And in 2005, 6, 7, the NAVs were up on average 50% per annum for three years. And this is not a bull run. You must be some young person must be asking this question. This is not a bull run. It is just a start.
So,
What is normal?
so if this is a start, then where are we headed, sir?
No, so as I said, as long as over long term you're making 15% per annum, which by the way, you are most welcome to right now go and check last 5 years annualized return. It'll be around 13% per annum at the index level. Also, another way of looking at it is that when we have a 6, 7, 8 year kind of a cycle, in that cycle, 1 year is negative and rest of the years are positive. But that negative year is so negative that it takes away the returns of even the previous year, right? In a negative year, you lose some 25%, 30%, which means it not only that year is gone, but that 30% fall is so bad that it takes away the previous year's returns also. So when we say that the market has been giving on average some 14% return over the long term, it is 5 good years and effectively 2 years are wasted, or maybe sometimes 3 years are wasted. So when the years are good, you're supposed to make more than 14, 15% return. So that the annualized return when after the losses will be this range. Now, why we think that this is not the end but a start is A, that over the next 6, 8, 9, whatever number of months, interest rates will be cut. Over the 5, 6 next months, the FII flows and the domestic guys might combine. Combine means that both wanting to buy. For the last 18 months, not these last 7 months, I mean before that, that means 18 months ending in December 22. That means start from say June 21 or something. The FII sold maybe 30, $35 billion, and that was matched by Indian SIP or whatever mutual fund flows. Now the normal situation can be that both want to buy, which is what is happening these days. But this is the natural path. One selling, one buying is not the natural state. The natural state is the domestics are buying and the foreigners want to buy because that is what foreigners normally do. In the last 20 odd years, maybe there have been only 4 years in which they have sold, and the other 16 years they have bought. They're supposed to buy every year, just like because every year there is savings, there is some GDP growth, some savings, and people buy. So you are making in this 15% range plus minus. What is the this thing can go on? It is supposed to go on forever, but the problem is that 1 year you'll make 25% return, and then next year you'll make 25. So you'll have to give up in some in between or
Absolutely.
third year. That's the way. But over time, this is just going to go on like it has for 25 years, or actually for life. Even before we were born, the market was been going up. This is world data you can find on Google. You can, why don't you look at, you just search on Google 200 years of US stock market data. You'll get it from a book by Jeremy Siegel. And you can see 200 years of data. Basically, markets are supposed to go up. And even the US market for the last 25 years has gone up like 8%, if I remember, or 7 point some percent in dollar terms. Even that market has grown 12% per annum for 25 years. Why are we getting excited about this being the end?
If you like the video, do like, comment, share and subscribe.